In this video, guys, we're going to look at the biggest mistake traders make according to Steve Cohen. Hey traders, a very warm welcome to. So Steve Cohen, very well-known trader. I've done a video exclusively on the guy before, but in the Stock Market Wizard series, he talks about the biggest mistakes that traders make. There are 4 of them, but they are good for us as retail traders, as guys who are trying to constantly improve, to bear in mind when we are trading for ourselves. Okay, so the first one is they make trades without good reasons. These are mistakes. They make trades without good reason. And by the way, this guy's managed multiple traders, dozens of traders, should I say, if not hundreds of traders. So he recognizes what makes a good trader or makes a bad trader. So first one, let's go back to it. They make trades without good reason. I think it's going up, I think it's going down is not a reason. There has to be a justification for the trade. So I'm not sure what the kind of decision-making process was at SAC, but there has to be justification, i.e., hey, there's a technical thing here, there's a catalyst here, and I believe that this is why it is going up. I also see a good risk-reward entry for the trade. This would be from my perspective why I would justify it, like, hey, I like this setup, I like this pattern, it sits in with what I know is a profitable pattern, the risk-reward ratio is okay, we've got an additional catalyst with this, we've got a good time of day, we've got a good day of week, we've got good levels. That's why I think I'm in the trade. That is fundamentally key, guys, to making good trades. Even from your experience, you know yourself that when you're trading, unless you have a good reason to take the trade, most of the time it ends up being a pretty rubbish trade, right? You take it, you look back on it, you go, why the hell did I take that trade? Oh, well, because it was a head and no, would you have normally taken that trade? No, you probably took it out of board and you probably took it just because you thought it was going to go up. So very strict on that. One of the first things that he said is, hey, you've got to have a good reason to take the trade. And actually, I don't think it was Steve Cohen, but I know another prop guy, or was it hedge fund manager? His name escapes me, but he would used to go out to people and he would say, hey, what trade have you got on? Why have you got that trade on? If they couldn't tell you why they had the trade on very quickly, very succinctly, in kind of 1 or 2 sentences, he would say, kill the position. So he'd want you to know why you had that trade on, the reason you had the trade on, the justification for the trade. And I think that also comes from the fact of holding the position. If you're in a trade because you think that this is a great technical setup, it's got a good catalyst, you are likely to hold it for much longer and squeeze much more out of the trade than you are that I think it's going up, because it might go up and stall. You think, well, it did go up, should I take it now? Whereas if you've got a real meaty reason for it, you're going to hold that for as much as you can. You might even press it and add to it and pyramid into it and really make it a beautiful winner for you. Okay, number 2, guys, is they step in front of freight trains. I think we can all hold our hands up and say, if we've been trading for any amount of time, we've done that, and we have the scars of the train wheels to prove it. You know the score. Trending market, you think you're a genius to pick the top of it or the bottom of it. You stand in front of it like a hero and it just splats you over. Swing trading, day trading, it's the same thing. Guys, when the momentum is strong and it's solid, you don't need to be clever. Yes, there's a time and place for picking the turning points, and we have strategies for doing that as traders, but waiting, just stepping in front because it's up a lot or down a lot is not a good way to trade, and it inevitably ends up in tears. If it doesn't, it ends up cementing a bad habit, so just don't do it. Right, number 3, they short stocks that are up. So it's interestingly, specifically, he's mentioned going short here on stocks. And of course, shorting stocks can be a super dangerous game. Just because something's up, we know, you can probably think in your head now of a dozen or so, or half a dozen stocks that we know are overvalued on paper because they're up. But there's a different kind of thing in play. People are buying them because they're looking at a different view. They're hard to value. Shorts are getting killed on them. They're up kind of 10, 20, 30 times the initial IPO price or the low. They're up massively. There's no real justification for it according to the shorts, but then the bulls come up with arguments. In a day, price is price. So his rule was, hey, don't short stocks that are up. There's got to be a good reason for going short. Probably stuff like, hey, the balance sheet is poor, they're burning capital, maybe they've got to have debt, all these kind of fundamental reasons that would probably go into SAC or whichever kind of trading vehicle he was using at the time when he wrote this, would go into the decision-making process for taking short positions. All right, finally, know what you are and what you want. He famously said, if you've got a comedian, you go to a comedy show, a comedian gets up and he starts singing, you're like, well, why is he singing? He's a comedian. And what he's trying to say is, hey, if you're a day trader, stick to day trading. If you're a swing trader, stick to swing trading. If you trade based on fundamentals, stick to that. Stick to what you are good at and don't try to be a jack of all trades or to kind of go with what the latest fad thing is. If you're a currency trader and you like trading currencies, just stick to currencies. Stick to swing trading the currency pairs that you like. You don't have to start trading DAX. You don't have to start trading all the other things that seem cool. Just focus on one thing and be good at it. So guys, those are the 4 big things that Steve Cohen says are mistakes that traders make. Making trades without good reason, stepping in front of freight trains, shorting stocks that are up, and knowing what you are and what you aren't, or know what you are and what you aren't, rather than doing something that's completely different to where your skill set lies. Take care. Bye-bye.